Thank you, and good evening, everyone. I'm so excited to be with you, even in this virtual setting, our new normal in the COVID era. The pandemic has forced these unfamiliar norms on our entire world. It has disrupted the ways we convene gatherings like this one, the ways we work with colleagues and partners around the globe, and even the ways we connect with loved ones closest to us. But as you are witnessing along with me, the pandemic is doing far more than even that. It is laying bare our deepest inequities, and it is exacerbating our most troubling trends. It is highlighting the urgent need for fundamental shift, for systemic change, for a transition that opens the door to a very different future. At the Global Impact Investing Network, we are squarely focused on building toward that future. Much of my recent work has been focused on tackling the three stages of the challenge before us. First, of course, we are working to respond by addressing the immediate moment of crisis. Second, we are aiming to recover and build back stronger by leaning into this moment of opportunity. And ultimately, we are striving to become more resilient, to build more resilient economies through unprecedented collaboration and truly fresh approaches. It is a tall order. But today, I'm more convinced than ever that impact investors can help lead the way into our next normal. A new status quo that thinks about investment capital in an entirely new way. A shifted paradigm that honors the role of all stakeholders, from workers to the planet itself. Even now, 6 months after health officials first declared coronavirus a pandemic, the global community is still struggling to get firmly ahead of the virus and struggling to fully comprehend its vast human and economic toll. That toll, of course, is changing every day. Some 870,000 lives have been lost worldwide so far. Millions more have been badly sickened. And we've seen an historic contraction of global per capita incomes. That toll is profound and deeply troubling. For many of us, it is being felt in deeply personal ways. But tragically, the ripple effects of this crisis are even broader. The pandemic is exacerbating many of our most troubling global trends. These are trends which had already gained a foothold long before the first outbreaks appeared. Our global inequality crisis is growing even more dire because of the uneven ways the pandemic impacts rich and poor. Insufficient progress toward achieving the United Nations Sustainable Development Goals is now being exacerbated, and financial volatility has spiked to extreme levels. Meanwhile, the climate crisis is threatening lives in other ways. Not a single major developed economy is on track to meet its commitments on the Paris Climate Accord, even as 2020 will likely go down as the warmest year on record globally. Amidst all of this, we are also facing a crisis of distrust in both business and government, the very leaders we need to guide us toward health and progress. As this pandemic-infused crisis looms on so many fronts, we clearly need a broad-based response across governments, civil society, and the private sector. And the impact investment community must rise to the occasion and play its critical role by working together and collaborating in new ways. Already, our industry is responding by doing what it does best. The Response, Recovery, and Resilience Investment Coalition, launched in May, is streamlining impact investing efforts to address the large-scale social and economic consequences of COVID-19. R3, as we're calling it, is a fast-moving effort across prominent impact investing networks, managed by the GIIN as the organizing body and supported by leading foundations. R3 acknowledges the urgency of the moment, the collective potential of our networks, and the need to share our best resources and ideas for the common good. It highlights impact investors' willingness to be adaptive and innovative, not only in the investments they make, but as a community. In this time of daunting challenge, we must admit the limits of what we can accomplish alone and instead lean into that communal strength. But as the R3 name suggests, response is only the first and most immediate stage. Even in this moment of crisis, we must work toward the recovery and resilience that must come next. This moment of collective crisis, tragic as it continues to be, is also revealing a moment of collective opportunity. If crisis exacerbates our most troubling trends, it must also carry the potential to amplify our most encouraging trends. I'm convinced that we can recover. We can build back stronger, greener, and more diverse by leaning into that opportunity. At its essence, impact investing is focused on leveraging capital to achieve goals beyond just financial return, to create positive change for our communities, our planet, and its people. Clearly, that approach must be front and center as we recover. Let's look for a moment at the size of this global industry and the direction it's headed to better understand the opportunity before us. The GIIN's 2020 Annual Impact Investor Survey is our 10th yearly assessment of the state of the market and its most important trends. This newest report shows an industry that is growing in both size and sophistication. Our research team estimates that there are now at least $715 billion in assets under management across the global impact investing market. And 90% of respondents are meeting or exceeding their financial objectives. But few investors are working in this industry for its financial performance alone. At the GIIN, we are keenly focused on impact performance. We are raising the bar on real-world outcomes of impact investing. The industry is showing signs of coalescing around consistent approaches to impact measurement and management, embodied in the GIIN's Iris Plus system. At the GIIN, we feel strongly that a keen focus on impact performance is central to addressing concerns about impact washing. We also know that impact measurement alone is not enough. Impact investors and their teams must be intentionally and actively managing towards the impacts they seek. Clearly, the recovery-related opportunity is ripe in impact investing. But there are also signs of tremendous promise in the world around us. Signs that our recovery can be built back stronger. The European Union's taxonomy for sustainable development is a long-awaited milestone in the sustainable financial market, giving concrete shape to impact aspirations and impact claims. Titans of industry, from global CEOs to many of the world's billionaires, are advocating for fundamental change to our economic system. And more retail investors are holding companies to account for their environmental, social, and governance responsibilities with new vigor and urgency. All this evidence points to a shifting social mandate. People are expecting so much more from companies. They want businesses to treat workers fairly, to value diversity and inclusion, to help the broader community prosper, and to sustain a healthy planet. Our world has awakened to the reality that money can do so much more than just make more money. And in fact, it must. Our recovery from this moment of crisis must be shaped by that principle. But even as we work to build back stronger and recover, we must also be focused on how we build forward toward that very different future I mentioned. If we truly wish to build toward a more resilient future, we must think and act even bolder. We must collaborate as never before. After all, the coronavirus pandemic has highlighted our global interconnectedness and interdependence. That expansive web of human connection is, of course, how the virus moved around the world. But ironically, those same global links are also the solution. Our interconnectedness and interdependence allow us to powerfully confront this threat and build toward new strength. Now, more than ever, the world requires collaboration to address its most pressing global problems. These are problems such as climate change and inequality that, just like COVID, transcend our international borders. So our industry must work together, and with R3, that work has begun. But I also believe that R3 can be a model for resilience-focused collaboration far beyond impact investing. It is just one example of how diverse organizations can work in a unified way, from philanthropy to NGOs to governments to big business. If we're going to work toward a more resilient future, this time of global crisis requires a united global effort. I know that you've been hearing from me and many others talk a lot about this time in history as a moment of crisis. But I think there's one crisis that we're not talking about enough, and that is a crisis of imagination. Too many of us are still thinking too small. Our creativity is still too dampened by the dominant sense of constraint. But the pandemic and the many crises that it inflames present an unprecedented opportunity for lasting change. In the words of Indian author and political activist Arundhati Roy in the Financial Times, the pandemic is, quote, a portal, a gateway between one world and the next. It offers us a chance to rethink the doomsday machine we've built for ourselves, she says. Nothing could be worse than a return to normality. Roy is absolutely right. So I'd like to add a fourth R word to our list, reimagine. Yes, we need to respond to the immediate crisis. Yes, we must aim to recover by building back stronger. And yes, we must be striving for that more resilient future. But to get there, we must reimagine. We need to truly open ourselves, our mindsets, and our approaches to how different our next normal could be. We need to truly picture what a more inclusive, more sustainable world would look and feel like. At the GIIN, we envision a future when impact is integrated into investment decisions as the normal way of doing things. Impact investments will be a viable option for every investor, from retail to institutional. Businesses and investors will hold themselves accountable to multiple sets of stakeholders, including not just shareholders, but equally workers, customers, suppliers, communities, and our environment. The outdated concept of externalities will be relegated to history, with finance theory accounting for risk, return, and impact. In this way, our reimagination of the future goes well beyond impact investing to all of investing, and indeed to the economic system as a whole. Over the past year, we at the GIIN have been thinking about our role in shaping a new capitalism. Our focus is on how we better collaborate to drive systemic progress. We've launched a new podcast called Next Normal, with the goal of giving shape to that path forward by interviewing leading luminaries and those who challenge our thinking. Even more recently, many of you have been seeing the imagery and messaging connected to the Imperative 21 Reset campaign, pushing for a reset to capitalism on the pages of major newspapers, on the ticker at global stock exchanges, and across social media. All of these efforts are working in symphony, aiming to chart the role of businesses and investors in moving to a more just, inclusive, and sustainable economy. They're striving to convene the conversations and to align the action that will move us toward that reimagined world we're all seeking. The impact investing community has made tremendous progress over the past decade. We have so much to be proud of. And yet, from almost any vantage point, it's also clear that many global challenges have become only more pressing. It is impossible to overstate the urgency of the problems we face. But I also believe that impact investing proves that fragments of our reimagined future are already showing up here, in the present. The work of this industry is evidence that the future is already happening, all around us. And I'm convinced that our community can help lead the way toward a more inclusive, more sustainable, more just world that so many imagine. That we can build for tomorrow the next normal we're envisioning today. Thank you.